To thank everybody out there for grabbing a drink. Please grab a drink or two. Double fist is okay. And grab a seat in here. We'll give you a minute to settle in. While I introduce the judges, Mark Burridge, managing partner and fund manager of Baker Steel Investment Managers. Mark, welcome. Mr. David Street, co-founder and CEO of Tembo Capital Management based here in London. We also have Daniel Porter. He's a portfolio manager, resources of Pure Asset Management. Robert Dixon is the managing director of the Dundee Corporation. Karim Nasr is the chief executive officer of La Mancha. Again, everybody out there, we'd love to see you in here. Don't be shy. I'll point fingers at all of you. Come on. Come on in here. Our competing panelists, I want to say one thing before the presenters come up. If you go over the 3-minute time, 15, 10, 20, 30 seconds, maybe even a minute, I'll consider that when I have to break the tie vote, and it won't be a good thing. So do not go over the 3-minute time limit. Also, if you leave at any point before the judges make their decision, like one individual did yesterday, I'm not going to look kindly at that. Okay, I'm just letting you folks know. Go over if you want to at your own risk, the 3 minutes. I will cut you off. And just a few Tourette's words from the mining sector right now. Open pit, head grade, and leach pond. Okay, there you go. You guys don't know, are your mics working? The rest of you, you just rather just stand out there, that's fine. That's okay. I don't blame you. All right, we are going to begin with one of our presenters. We will have 3 minutes for each presentation and then 7 minutes for the judges to ask their questions, and I will go up and down here and try and give you some time to ask the questions. Now, with regard to the 3 minutes, keep in mind, folks that are presenting, if you don't get everything in that you must say during that 3 minutes, you'll have some time during the Q&A to address some of those things. Just don't be ridiculous about it. We will begin with Mr. Charles FitzRoy of Bradda Lithium. He's the CEO of that company. Welcome, Charles.
Sorry, just waiting for the slides to start. There we go. Right, my name is Charlie FitzRoy. I'm the CEO of Bradda Lithium. My name is Charlie FitzRoy. I'm the CEO of Bradda Lithium. And as you can see from this slide deck, it is the right time, right place for Bradda. This year, we've had a fantastic rise in the lithium price to record highs. Countries around the world are trying to secure domestic supply of lithium. The US produces very little lithium and needs to secure its domestic supply, especially from a low carbon footprint point of view. And that's where Bradda comes into the picture. We've got 3 types of lithium assets: pegmatites, brines, and clays, all located in the US, in Arizona and Nevada, which are ranked 3 and 5 in the world for investment attractiveness, as is the Fraser Institute survey last year. We're exceptionally well funded, got just under $12 million in the bank, and also we've got another $5.5 million on the way from a royalty transaction we have on our sedimentary assets, which are Wiki Up and Basin there with Lithium Royalty Corporation, which we put in place last year. We are 100% owned assets, and the fantastic thing about being in the UK, US, in Arizona and Nevada is you can explore all year round. And we have 3 asset types, splits our geological risk, and also gives us more upside potential assets to be able to from news flow from when one's in development. As I said, tier 1 political location, fantastically located. It is the right time, right place. The US is investing $135 billion into electric vehicles and the critical mineral supply chain, and we're located to take advantage of that. All our assets are in first-rate locations with infrastructure nearby, very close to the highways. Also, most importantly, the assets which we're developing furthest, the Basin Project, our sedimentary asset, and San Domingo, our pegmatites. Both of them are located near existing mines, or their claims are on areas of historic mining. And also, very importantly, ESG-driven growth. We've got a very strong ESG policy And we have a community website which helps us to engage with our local community to demonstrate and communicate what we're up to and gives them ability to feedback for us. And then a key thing, the split geological risk gives us upside and also diversifies our portfolio. Strong cash position. We've also got a healthy support by the board of management, 18% owned by board of management. Our largest shareholder is Jim Mellon, very well-known investing individual. As you can see from this map here, fantastically located near the burgeoning US electric vehicle and battery supply chain. And key for us is we are located our projects near existing mines and historic mines. Very supportive board of management. Ian Stalker is our chairman. Ian's a very well-known mining entrepreneur. Spent 30 years in Africa, built 12 mines himself, and then Jim Mellon there as well. We also have a very strong advisory team from ESG, technical and processing side of things. So all in all, a fantastic time to invest in lithium and in Bradda Head in the USA. Very well-funded operation with a huge split geological risk.
Thank you very much. Great presentation, Mr. FitzRoy. Now let us begin with Mark Burridge with your question, please, sir.
Thanks, sir. Thanks, Charles. I missed your market cap. I don't know if you mentioned it. And then I've got a question about what your plan is to get it from this stage of development through funding and development. Where will you raise the money? Do you plan to develop it yourselves, or do you bring it along to a certain point and then invite in somebody to buy the company or joint venture the assets? How do you see that evolving?
Well, right now our market cap's £30 million. We are up at about £70 million earlier this year. Luckily, we raised funds in April this year, so we raised just under 13 million US. So we're very well funded to take all our projects to end of next year, which enables us to understand and demonstrate the value in them. At this point, we have quite a few projects. Obviously, we're going to focus on the most exciting. And right now, we have a resource in place at our clay asset basin. The San Domingo, the pegmatite district, hasn't been drilled before. It's the first drill program into it. And the brine projects up in Nevada haven't been drilled yet. So it is a bit early stage to go to some of the questions you're after, but we have enough funds to be able to demonstrate the value of them without coming back to the market. I think that's an important thing I want to get across.
Thanks.
David Street, your comments, please, your questions.
Thanks, Charles. Couple of questions. So the budget you've got currently is basically to drill out the resources. Which of the projects are you prioritising of the three now? And second question is, what's the land status on the different projects? Is it privately owned land or BLM, and talk a bit about the permitting, perhaps?
Yeah, so from a permitting point of view, we have a very good permitting professional. He used to work for the BLM in Arizona. Our permits up in Nevada are all federal. In our clay projects in Arizona, a mixture of state and federal. We have a resource currently on state land in our clay asset, but we also have federal lands next to it, which we're expanding to drill programs for next year. Our pegmatites are a mixture of state and also federal. So all in all, we have 23 square kilometers of pegmatite claims, 41 square kilometers of clay claims, and 21 square kilometers of brines. Sorry, what was the first part again? Apologies.
Which project are you focusing on, and where are you spending the money?
So the focus is on the clay project basin, where we have a resource already, and we also have a royalty. So when we expand our resources at basin, we get royalty payments in phased amounts. That helps pay back drilling. The pegmatites, obviously, we are drilling there right now with assays shortly and also next year. If we get positive results from the pegmatite projects, that will catapult our valuation, because pegmatite miners have much higher valuations than brines and clay. So the pegmatite project will very much become a focus. But the clay project is always going to be ticking along in the background, growing our resources, pushing towards a PEA starting next year.
Thank you. Great answer. Daniel Porter.
Thank you. Good pitch. Just in terms of your resource and grade, how long do you think it's going to take you to get to feasibility study? Is that 18 million enough to get you to that level?
I think we've got the funds in place to be able to get to a PEA, and I think to get to a feasibility, we're definitely going to need more funding. But I suppose the beauty of having a sedimentary asset is the drill spacing can be quite large compared to a pegmatite body or something else. So we'll have to work on that when we get up on that resource estimation size.
Yeah, So it's too early at this stage to give an indication on a resource and grade?
Yeah, I think it's a little bit early. We've got a small resource in place now. We have a split resource between an upper grade zone and a lower grade zone. The upper grade zone is higher grade, but we're chasing that to the northwest where it thickens over to the western side. But yeah, probably a little early for the whole resource estimation.
Thanks.
I would prefer that the judges stick to one question, please. Mr. Rob Dixon.
Well, I have two, but I'll stick to one. When you do produce a product, you mentioned earlier that there's a lot of those sort of gigafactories and so forth in domestic US that could use your product. How do you know what type of deliverable, I suppose is the right word, to those factories? Because I'm certainly no expert in lithium, but you know the specs, I suppose, for the batteries are often changing, and you know when you guys are going through this huge, lengthy process to deliver a product, how can you ensure? And I guess related to that, that you're getting the right product, but also is there an offtake, and are you going to be producing one particular battery or more? I mean, have you got that far yet?
That is probably a bit too far for us, but the beauty of having the three types of project is it gives us the ability to produce hydroxide and carbonate, which again, different batteries need different lithium products. So that's really gives us the optionality I think which you're asking for.
And our final question, Karim Michel, please.
Can you tell us a little bit more about the pitfalls of producing out of clays in lithium?
Sorry, say again.
The pitfalls of producing out of clays and how frequent or how widespread is production out of clays?
Yeah, so obviously in the scheme of things, you know, brines and pegmatites produce the majority of the world's lithium. So the clays is a developing field. We are seeing a lot of projects producing economic studies, and people are developing technologies toward clay. So it's something where we are focusing on our metallurgical test work, but also we see a lot of value in clays right now because counterintuitively, some people view clays as not a good investment, but right now, because of the low value of them, I think they are a good investment because in a few years' time, people are going to be very aware of how to process them, and that's just how it's going to work. So I think now is a fantastic time to invest in clay projects because of that.
Thank you very much, Anthony. Great job. And good luck to you. Great presentation. I want to add at this point, ladies and gentlemen, that each of our participating companies, our contestants here, have won hard-fought battles up until now. So you're seeing the very best of the best here. Moving on, Anthony Margarit, he's the CEO of K2 Gold. Welcome, sir. We look forward to your presentation. Big hand is welcome. And people, keep drinking. Drink up. Come on. It's better when you drink.
All right. Hello, everyone. My name is Anthony Margarit. I'm the president and CEO of K2 Gold Corp. We're a Canadian junior gold explorer based in Vancouver, BC. We have 3 projects in our portfolio, 1 in the Yukon Territory and 2 in the southwestern United States. Our company is a proud member of Discovery Group. Discovery Group is an alliance of 8 individual public companies with a proven track record of generating shareholder value through responsible, sustainable, and innovative development. Discovery Group companies have generated over $500 million in direct and indirect expenditures, resulting in more than $3 billion in merger and acquisition activity, with the most recent success being the sale of Great Bear Resources to Kinross Gold Corporation. Being part of a group that has had success such as this provides us at K2 with the knowledge, experience, access to capital, and deal flow that separates us from our competitors. Now I'd like to introduce you to our SI2 project located in the Walker Lane district of Nevada. This project's focused on a massive 8 square kilometer steam-heated alteration cell that's analogous to AngloGold Ashanti's Silicon project, where they recently released a 3.37 million ounce gold resource. K2's project and AngloGold Ashanti's Silicon project were both optioned from origin royalties and were identified using the same methodology. SI2 displays the same characteristics that were noted at Silicon prior to discovery. It all started when we discovered broad areas of high-level argillic alteration at surface. We followed that with a ground magnetic survey and identified 2 major structures that are interpreted to be faults. Then we completed a geological mapping and rock sampling program to validate what we were starting to see. That's when it got really interesting. Our highest mercury in rock samples, strongest silicification at surface, and best areas of argillic alteration all started to appear to be connected by the interpretive fault structures we identified from the magnetic survey. These characteristics are strong indicators of the upper level of a preserved epithermal system. We just completed an IP survey and we'll be releasing those encouraging results very soon. This is an exciting project and we're planning to drill it Q1 of 2023. Next, our Wells project, located in the Yukon Territory of Canada, southwest of Newmont's Coffee project, which was acquired from K2's predecessor, Kaminak Resources. Based solely on gold and soil samples, K2 drilled the saddle zone previously. The program returned great results. This past summer, we completed a ground VLF electromagnetic survey and it lit up some very interesting structures that we're looking at right now that are coincident with gold and soil anomalies. The Chai, Gunpowder, Oolong, and Mancha target areas are all display similar evidence of potential mineralization as a saddle zone. This stands as proof of concept for a property-wide structurally controlled gold mineralization. We're planning to drill these targets summer 2023. Our catalyst going forward, we're gonna finance early Q1 of 2023 in order to drill the SI2 project in March. Then we're gonna drill the wells in the summer and finally have our Mojave project ready to drill Q4 2023. Thank you for listening. I look forward to your questions.
Thank you, Mr. Margarit. We will start now with Karim Michel.
Thanks for the great pitch. Eventually, a lot of those projects that are adjacent to other people's projects and developments themselves, but a lot of those projects are still in development themselves. Where do you think the resource can get to before somebody turns around and needs that kind of project in terms of supplementing their own, if that's the intention for you ultimately?
So the question is, where do we think we can get the project before someone acquires us?
Yeah.
That's our business model. I have no intentions of trying to build a gold mine. Our business model is develop a project, define a resource, get it to the resource stage, and wait for the acquisition at a premium on our share price.
Thank you. Great question. Rob Dixon.
Maybe I missed it. If I did, forgive me, but your market cap and how much cash in the company right now?
Our cash position, we're just under $1 million. Our market cap, we've been beaten down the last few weeks with tax loss selling, but we're anywhere from probably around 7-8 million right now.
Okay.
And Daniel Porter.
You mentioned your drilling program for next year. Can you just talk about how much cash you're going to need for that and the time frame to get that up to resource?
That's why I'm looking for this $1 million from you guys. We're going to drill our SI2 project in Nevada in March, planning to raise $2 million Q1. So that's why I'm here right now, pre-marketing. And as far as the budget for that, probably $1.5 million. Okay,
thanks.
And David Street.
Could you just tell me a little bit about the history of the Nevada project? Who owned it before? What work was done on it before you picked it up?
So we just acquired the project in January. That's what's been really incredible about this project. The timeline to get it to where we are now, being drill ready, and with really there's no other work we can do. Historically, Kennecott drilled Kennecott, which is Rio Tinto's exploration arm. They drilled 3 shallow holes in the 80s, late 80s, 87, I think. They were very shallow, around 100 meters. They never got through. They didn't understand where they were in the epithermal system at that point. They were drilling based on, there's some silicified ribs that are really high in mercury. That's what they were targeting. They only got into the chalcedonic blanket, which is kind of, if you look at a preserved epithermal system, you've got this argillic alteration at surface. You get into the chalcedonic blanket, which we acquired those drill logs. It was great to see that. It really gave us an idea of where they were in the system. And there was weakly anomalous gold in both of those holes, or 2 out of the 3 holes, which is great. We know we're on top of an epithermal system. One of the questions we had was, is it mineralized? And seeing weakly anomalous gold that high up in the system is really encouraging for us.
Thanks.
And Mark Burridge.
Thanks for that. It's good to see some classic exploration being done in some good ground. My question is, you've got 3 projects, limited budget. How do you see yourselves prioritizing? If you had to just drill one, if you could only spend the bucks on one project because capital markets were dried up or whatever.
Oh, that's a tough one.
If you had to spend the $1 million we gave you on one project, what would it be and why?
If I had to spend it on one, it would most likely be in the Yukon because we've got some limited drilling into there that returned fantastic results. I've got a lot of experience working up there and consulted on the coffee project after Gold Corp's acquisition. I really understand exploration and what we're looking at, and I'm very confident we're going to return some great drill results up there. So if I had to pick a project that I knew I was going to turn around positive drill results on, it would be that one. But I really love our SI2 project in Nevada. It's strong.
Okay, thanks.
I think I'm going to have to throw away my one question rule. Anybody else have any additional questions right now? We have 3 minutes.
How many shares outstanding?
We're 64.8 common shares, 79 fully diluted.
I've got a curveball.
Let it rip.
Exploration company, the E in the ESG, not too relevant, except make sure your drill platforms are fine. But how does a relatively new company with new projects deal with things like diversity, inclusion, and social issues, for example?
I spent a big portion of my career with Rio Tinto, who I think really led and helped pioneer the ESG movement and really been positive in that environment. I think the best things we can do as a junior is we work in remote communities most often, or isolated communities. We're usually not in a big city. So doing the most we can to support local hiring and supporting local suppliers as much as possible, putting as much money as we can back into the local communities we work in. That's the most positive thing we can do as a junior with limited budget, and really not a huge, there's not many of us in this company, so.
One more question from anyone.
Can I just ask who are the main shareholders currently, and how much does the management own of the company?
Management holds 18%. The majority shareholder is Canaccord, and Haywood would probably be shortly after that, Haywood Securities.
Thank you very much, Anthony. Great job, great questions, great presentation. Good luck to you.
Thanks. Thanks a lot.
Certainly.
Thanks, guys.
Our third presenter is the illustrious and very handsome Peter Ledwidge, the managing director of Mako Gold.
Thanks for the compliment. I'm the managing director, and I'm going to be talking about Mako Gold, listed on the ASX, and our ticker is MKG. So we're working in West Africa in Côte d'Ivoire. You can see we have a lot of good company there, a lot of other companies. Endeavour actually just made a large discovery last week. And we have 2 projects. I'll only talk about the Napgate project, our flagship project. So a pretty exciting project. We announced a maiden resource in June of this year, 868,000 ounces at 1.2 grams per ton. And we've got the area where we're looking at, it's 30-kilometer fault. The 2 resources areas only represent 13% of the entire project. So we're going to be growing it by right now doing a 25,000 meter auger drilling program. So along with that 30-kilometer fault, we got a 23-kilometer soil anomaly. So that auger drilling is going to reduce that anomaly to workable targets. And we just finished drilling on the 2 resource areas that you see in green. And the object is to get the footprint of that. Then when we get footprints of other chagas, which is 500,000 ounces, we expect to get 3 or 4 of those. Once we get that, we can sell the story, have a lot of credibility that we're targeting 2, 3, 4 million ounces within the next 2 years. So here's a Gogbala prospect, 323,000 ounces. That A target, 4.5 kilometers undrilled, other than that little area where you see the 6 meters at 5 grams. That was 20,000 ounces of the resource in 6 drill holes. So we're expecting the auger to point a couple of targets there, probably 2, 3 targets, about 500,000 ounces, and then we're going to RC drill that. Metallurgy, we've done our preliminary metallurgy, and both oxide and fresh rock came back averaging over 94%. So we're pretty confident that we've got a pretty good deposit and that it's amenable to CIL leaching. good shareholders. We got 28% institutions on there. That includes Dundee, Delphi. We've got Sprots on there and a whole bunch of other institutions. Management owns 3%. I personally own 2% and got a lot of sweat equity. First projects were gotten on the back of my house mortgage. 20 million market cap and about 16 million EV. 100% African team, and our management has a lot of experience in West Africa. ESG, we've always believed in it, and we live and breathe it as we go. And here's a quick go-through story.
Thank you very much. Great job. Thank you very much for a wonderful presentation, Peter. Let's begin with our judges and Mark Burridge. Your first question, please.
Yes, thanks for that. I wouldn't mind a quick history of what made you come to this area, pick up the ground, and how you got hold of it.
Well, most of the team is ex-Orbis Gold. I acquired all the permits for Orbis Gold, led the team on the first discovery. My wife and colleague of 30 years, who's in the audience, likes to outdo me, so then she led the team on the big discovery. That was 2 million ounces at 3.4 grams. So when Orbis got taken over, we founded Mako along with our West African partner, and formed it in 2015, listed in 2018, and have been drilling ever since. So it's a prolific area. The whole Burridge Greenstone hosts 400 million ounces of gold. That's 40 deposits over 1 million ounces, and out of that, 30 of them are, 70 deposits, and 30 of them are over 3 million ounces. So definitely elephant country.
Thank you.
Oh, sorry.
No worries. And David Street.
Thanks, Peter. Can I ask, are there any artisanals working on the licenses, people that you need to move? Are there any villages on the licenses? What's the situation with that?
Yeah, there's a few artisanals, and the difference between that and a lot of the other areas in West Africa is that Côte d'Ivoire has a zero tolerance to illegal miners. So there's a few that sneak across the border from Burkina Faso, and if we need to move on, the government will assist us. But the way it works now, we've got a few of them. They do free prospecting for you, and when we need to work, we ask them to leave. If they don't listen to us, when we have our bulldozer out, we fill in the holes that they dig, so they get the message pretty quickly. And sorry, I didn't get the second half of your question.
Do you need to move any people or villages or that kind of thing?
So,
do you need to move any people?
oh, sorry. Yeah, we've got a very small village close to the prospect, and I'm saying like 100 people. So that's not an issue. Basically, when you relocate somebody in that part of the world, they're living in a mud hut sort of thing, and then you offer them a house with electricity and running water, and it's not too hard to convince them as long as you give them some land to farm. So it's quite easy moving people along.
Mr. Porter.
Thank you. Looks like an interesting project. Just in terms of your intentions, assume that you want to take this into the production stage. What sort of financing challenges do you foresee in being based in the Ivory Coast, and what is the government doing to help you in that regard as well?
Well, I don't see too many obstacles because, for example, if you look at Burkina Faso, where we've worked in the past before, 10 new mines went into production over 10 years. We're seeing the same pattern emerge in Côte d'Ivoire, so I don't think getting funding for those things is an issue. And I forgot the second half of your question, sorry.
And what's the government doing in order to help the project move forward as well?
Actually, that's interesting you asked that, because in most jurisdictions like North America, Australia, if you find a deposit, the government will build a road or a power line for you. In West Africa, the government has a 10% free carry in the project. Some people see that as a negative. I see it as a positive because as soon as you've got a resource, they roll out the red carpet for you, because they've got a vested interest. So for example, when we were with Orbis, we discovered the discovery hole on the Bungu mine was in 2012, and the mine went into production in 2017. The government wants to, get that money, and so it's really accelerates things.
Thanks.
And Rob Dixon.
Peter, you raised money recently, and the use of proceeds was to go along that 30 kilometers, auger drilling. Can you just speak to the auger drilling program as it was thought out, and also maybe without, have you identified a lot of interesting anomalies and so forth to follow up later in the year with some RC drilling?
Yep, so that's exactly the object of that auger drilling program. We know it's not quite as sexy as saying, hey, we're doing RC or diamond drilling program, but in effect what we're doing is we're looking at all the areas where we get these huge soil anomalies, so we need some drillable targets. So by identifying the footprints, that for similar to Chaga or Gogbala, where we have known deposits, then after that we can RC drill it. So in effect, we'll get that done in about 3 to 4 months. We got 5 rigs on the ground now, 25,000 meter drilling program. And then after that, that will save us money because we'll have reduced the size of those targets, so there'll be less dud holes. So if you guys choose to give us $1 million right now, we're funded right through to doing the auger and then some RC, because we're going to follow up one target and proof of concept by putting some wide space drilling. And then after that, when the funding, we'll need some more funding like any junior. And what we'll do is each of those targets, we'll put 3 or 4 drill rigs on them and then just drill it out and get 500,000 ounces, then go on to the next one, drill it out, get 500,000 ounces. So it's a clear strategy of growth. We hope to have 1.5 million ounces by the end of 2023. And hopefully 2.5, maybe even 3 within 2 years.
And one quick final question from Karim Michel. Okay, that's fine.
At what point do you think, or do you already have a feeling for where the deposit can start getting densified into the PA or the areas that you think could be conducive to mineable deposits?
Yeah, so when are we planning to do PA? Is that what you're asking?
Yeah, I'm asking whether at this stage you already have a feeling out of the existing resource that there's something where you could develop a PEA and get to that 1.5 million ounces. Yeah,
well, we won't do any of those, PEA or scoping studies till we have 1.5 million ounces into the ground. And the simple reason is, we've got a lot of experience doing this. We've been doing it a long time. So we know that right now 900,000 ounces of 1.2 grams is not economic. So we'll do a PEA or scoping study, if you will, once we have at least 1.5 million ounces into the ground. We're working backwards from a model that we want. So minimum that we want is 100,000 ounces per annum over 10 years. So that means in order to do that, you need a 1 million ounce reserve. So if we have 2 million ounce resource, then you're pretty confident you're going to have an economic project. So, the threshold to start doing that is when you get 1.5 million ounces.
Thank you very much. Appreciate it. Thank you very much. Great presentation, Peter. Now here's a guy you want on your side if you're in a rough and tumble. Also very dapper, Paul Fowler, the Senior VP of Magna Mining. Ladies and gentlemen, give him a hand.
So, for anyone that wasn't here yesterday or doesn't know, this is the Big Nickel in Sudbury. It's about 30 foot high, and it stands testament to the 120-year mining history of nickel in Sudbury. Sudbury is probably the oldest, the richest, the most storied nickel mining district in North America. And it's also probably in the very small handful of world-class nickel sulfide ore bodies globally. The reason for bringing that up, by the way, is that Magna is the only junior nickel mining company with advanced stage assets in the Sudbury Basin. And this is a graphical representation of that. You can see Vale, Glencore, KGHM. Magna Mining's property are down to the southwest side here. We have two key assets, the Shakespeare past producing mine and the Crean Hill past producing mine. Incidentally, this map accounts for 9 of the 11 critical mineral producing projects in the whole of Ontario. So this is our business model. We're aiming to reproduce the hub and spoke production model in Sudbury. The Shakespeare mine is a past producing nickel copper PGM mine, 20 million ton indicated global resource, and perhaps most importantly of all, permits to construct a 4,500 ton per day open pit mine, mill, and tailing storage facility. The very recently acquired Crean Hill mine, 30 million ton indicated resource, which includes 14.5 million tons of high grade underground. And we project they will both feed into a centralized Shakespeare processing plant, for which of course we have the permits. The combined resources of both Crean Hill and Shakespeare are approximately 650 million pounds of contained nickel, or 300,000 tons. So that means, of course, that Magna is certainly in the conversation when it comes to solving the near-term demand for nickel from the EV sector. The idea is that we'll produce our own nickel and copper concentrate, which includes payable copper, platinum, palladium, and gold. So we believe we're a uniquely positioned junior company. Many of these characteristics you won't find in other companies, and it's certainly very rare to find them all together, not least having multiple assets moving towards what we hope will be a hub and spoke production model. We have major permits in place. We have the potential to expand our existing global resources. And perhaps most excitingly of all, we think that there are some excellent, potentially world-class exploration targets that come with the Crean Hill acquisition. The last point, which just skipped through accidentally, was that we also believe there's the potential for us to move into near-term cash flow through toll milling from Crean Hill at one of the mills that exist in Sudbury at the moment, of which there are 2 with capacity. So what's coming next? Lots of drilling next year. We're hoping to reproduce some of the drill results we came out with Crean Hill last week, with some of this massive sulfide that you can see on the screen. We'll be commissioning a PEA on Crean Hill to show everybody what we think, hopefully demonstrate the economics of this newly acquired deposit. And we'll be looking into more detail about the potential for us to move into cash flow in the near term via toll milling. And with that, I'll happily answer any questions.
Great presentation. Thank you very much, Paul. Let's start with Karim Michel. Your first question, please.
So could you talk a little bit about the technology you're envisioning for processing the sulfides?
Well, it's conventional. It's conventional flotation. Sulfides have been processed in Sudbury for 100 years plus. So there's nothing complicated about it at all. All the ore bodies in Sudbury are very reasonably homogeneous, including the Crean Hill acquisition that we just made. So conventional flotation technology. Sorry.
Okay, Rob Dixon.
Can you just touch on, you mentioned both their exploration upside to both of your assets, Shakespeare and Denison, et cetera. Can you just speak to the exploration upside, and also, you know, related to that, obviously, the ability to expand those resources, you know, to feed that central mill?
Yeah, absolutely. It's hard to do that in a couple of minutes, but I'll give it a go. Yes. Crean Hill, I'll talk about Crean Hill predominantly because it's the one we're most excited about from exploration upside. Make no mistake, Shakespeare has significant exploration upside. It's just that we don't yet fully understand the geological model at Shakespeare as well as we understand it at Crean Hill. And the reason we understand it at Crean Hill is because this model has been discovered in Sudbury since the first nickel discovery. We think FNX is a good parallel to draw here for anyone that's familiar with it. FNX created a 1.5, at one stage, $2 billion company out of exploration potential in the footwall at their deposits, which looks exactly like Crean Hill. Crean Hill is the only deposit in the whole of Sudbury, significant what's called contact deposit, where they have not yet discovered the footwall. So to try and summarize it as succinctly as possible, we're looking for the footwall deposit along with extensions to the existing resource at Crean Hill, which we're reasonably comfortable exist.
Mr. Porter.
Yeah, great prezzo. It sounds like you're pretty advanced. If you had $20 million, what would you do with it tomorrow, and where could you get to in the next sort of 12, 18 months? And second question, if I may, why haven't Glencore and Vale taken you out yet?
Well, I'll answer the second question first. you have to bear in mind that we only completed the acquisition of Green Hill 4 weeks ago. So this is brand new. And in fact, this is our first overseas marketing trip. And even prior to that, as a company, everyone was under lockdown with COVID. So we haven't really gone out and told the world about our company. What would we do with $20 million? Well, at the moment, we're projecting a budget for next year, which is, I mean, it's significantly less than that at the moment, but that's entirely focused on drilling. Like we believe that there is incredible value to add through the drill bit, particularly at Green Hill, because of all the exploration potential. So that's where, I mean, I'm not sure we can spend $20 million on drilling because you have to make sure you target things properly and don't have rigs running all over the place, and you want to make sure you do it properly. But a bulk of that would go to drilling at Green Hill, no question. We are looking into the possibility of doing an advanced exploration permit as well with a bulk sample, which could potentially, and I say potentially, move us into production via toll milling, and that would cost somewhere in the region of 20-30 million. So that's something we'll look at next year. I'm not sure I'd commit to spending that yet, though.
Thanks.
And where are we at here? Mr. Street.
Thanks. It's a good presentation. Can I ask a little bit about the management team backgrounds, experience in this part of the world, and secondly, about the shareholder sort of makeup at the moment?
Yeah, I'll start with the latter one. The shareholder makeup, Dundee own 22% of the company. They've been incredibly supportive shareholders, and Jonathan Goodman is actually now on our board. We also have a new long-term investor supportive shareholder called Hawke's Point, and I think we're their only investment in Canada. They came in on the last financing round, which we completed with the acquisition of Green Hill. The management team, this is an important point about our company that I didn't have time to really elaborate on the slides, but with the sole exception of me, as I'm sure you might be able to guess, the entirety of our management team is based in Sudbury, lives in Sudbury, and has spent most of their professional lives working in Sudbury. So they know the basin inside out. It's the reason that we were able to identify this asset as a highly attractive acquisition when nobody else knew about it. We have operational expertise in Sudbury. We have geological expertise in Sudbury. And in fact, we've got a whole bunch of people from FNX, who I mentioned earlier, that are now engaged by us or working for us and keen to get to work on Green Hill.
Thanks.
And finally, Mr. Burridge.
Great, thanks. Would like to understand a little bit of the history of the company. Like you said, this is the first time you've been here. Tell us a little bit about the history. What you saw that your neighbors didn't see when this asset came up for sale, because you're telling me that one of your neighbors got spare mill capacity. Here's a deposit with what looks like attractive resources. How were you able to outbid them for what would have been a nice bolt-on? And what's that? And part of that answer should be, what is your vision or story around the value you've added to the asset base?
So the first part of your question about how we were able to outbid anyone on the asset. So we approached the owners over a year ago and told them of our interest. And the reason we approached them is because we've always had this vision for a hub and spoke production model where our existing asset, Shakespeare, is the hub. So we're interested in all sorts of possibilities of subsequently acquiring the spoke. So we approached them. They weren't running a process. So to some extent, we got a head start on anyone that may have been interested. But the other answer to that question is that it goes back to the map I showed earlier. The only, well, KGHM are not even actively engaged in Sudbury much anymore, apart from their Victoria mine. So the only two active mining companies really are Vale and Glencore. And there are some estimates, and don't hold me to this, but there are some estimates that Vale have somewhere in the region of 50 to 100 million tons of ore in inventory they're never going to get to. And it's a function of the patented land in Sudbury where they can hold it forever and never do anything with it. And they're either too small or they're deprioritized versus their other world-class assets. So all of our competition that might bid for it wouldn't have any interest. And then on top of that, Green Hill itself, we did a whole ton of due diligence on it, but of course we applied relevant commodity prices rather than when the resource on Green Hill was last calculated, which was a whole cycle ago. And we also applied the filter that we could potentially process this through our own mill at Shakespeare. We didn't have to assume that we would go through a third-party toll mill. So that meant that we were looking at it with very unique eyes, and we were probably very uniquely positioned to buy it, and we got a head start on all the competition.
Great, thank you.
Thank you very much, Mr. Fowler. Great job and good luck to you.
Thank you very much. Thanks, Liz.
Great presentations today, and our last presenter won just this afternoon, so here she is, the lovely and good friend, seen you around the world, Wanda Cutler of Vision Lithium. Welcome, Wanda.
Ellis. Okay, I will try to speak loudly because I know the guys out there are having a hard time hearing. Vision Lithium. So what I'm going to do today is present a story where I'm going to show you how we're, with a $30 million market cap right now, going to significantly increase that market cap by investing into our properties, but doing it without issuing new equity. So our plan, basically, we've got 3 lithium projects, 2 in Quebec and 1 in Manitoba. Oops, I'll go back. So our plan is to do a bulk sample. So we're gonna do a bulk sample, a 50,000 ton bulk sample. We've submitted a permit to the government of Quebec. We're awaiting their initial feedback, but we've had an initial meeting, and so far it's been very positive. The bulk sample it'll provide us ample material when it comes to mining this particular project, but we're also gonna have 50,000 tons of direct shipping ore that we can sell to the market, which right now is selling for about $950 US a ton. Our CapEx on this, if we contract mine it out, we're anticipating it to be about 25 Canadian dollars a ton. And then we can ship it down to southern Quebec or anywhere in the world, I guess, really, depending on where our off-takers are located. So we are going to be negotiating off-take agreements over the coming months while we await this permit. And then we'll be at the same time working with contract miners locally in Quebec to do this bulk sample. And we can do this bulk sample with very little CapEx expenditures, if any, because this project, you can drive a Honda Civic to it. So it's a dirt road, basically off the highway. It has 100-ton trucks go down it already. It's a logging road. It's maintained year-round. We've done some drilling on it. There are a number of dikes on this property that have yet to see a drill bit or really much exploration at all. So we feel like there's still a lot of upside even once we do the bulk sample. There is a 250,000-ton historical resource that was done by Nemaska Lithium at 1.4%. So we know the material is there. And we still have lots of material if we wanted to continue to work towards a mining permit later. Housing is also very good. So we've got a camp that's basically just down the road from the deposit. So even though it's remote, we don't have to worry about where we're going to put people. And we've done the metallurgy. So the metallurgy was all done on the number 5 dike. And we were able to make a 6% concentrate just using DMS. So we know that it's quality material. And SGS took it all the way to a lithium carbonate. So we've got 99.99%. We were able to make carbonate using that material. We take that money then, invest it back into Cermak. We've also got another project south near Val-d'Or, 190 square kilometers, lots of targets, and a 9.4 million ton historical resource in Manitoba at 1.49% that just needs some drilling. And that's it.
Thank you, Wanda. Great job. I think this time we're going to start with Mr. Street and work our way down the panel here. I want to introduce all of you. Thank you.
Thank you. Interesting. So am I summarizing correctly? It's a direct ship sort of business plan. You're not thinking about doing processing at all.
For right now, yeah, we're taking advantage of the fact that we can do this bulk sample, advance our knowledge of this project, and make some very good money on it from direct shipping ore. I don't know that that's our long-term plan, but certainly we'll be able to take that money and invest it back into our exploration properties to really advance them to a more traditional mine plan.
Okay, and the permitting presumably for a DSO, smaller operation, is that more straightforward?
So it'll be a bulk sample. So we've hired a mining engineer and we've hired a permitting specialist in Quebec. She's permitted a number of mines. So that's already all been worked out and been submitted. Yeah.
Yeah, thank you.
Thanks. Given your name, Vision Lithium, I just wonder, what is the vision beyond producing a few bulk samples and direct shipping that? Is how many tons of lithium do you think you've got as your geological target? Is it all going to be direct ship producing something that can easily be upgraded? Or is this just a small portion of what might typically be, as far as I understand from this part of the world, a more complicated, metallurgically difficult, system to handle? Just tell me what the vision is from a bulk sample to something that's meaningful in terms of supplying a significant amount of lithium to the world.
So I would say the vision right now is we have the bulk sample, we sign off takes, we get some prepay, that provides us capital for our exploration. We're going to continue to explore the Cermak project. It's seen very little exploration. We got that project at the tail end of the last cycle. So maybe we've put $5 million into it. It's a big property. You're 30 kilometers to the east. You've got the Mont Blanc project, which is a beautiful lithium deposit in Quebec. Nemaska's Wabushi mine is to the north. So I think ultimately you want to reinvest the capital back into these assets. To the south, the Cadillac project is earlier stage for sure, but there's 500 targets on it that we need to look at and put some boots on the ground and drill off a resource. There, you're 10 minutes outside the town of Cadillac. You're halfway between Val-d'Or and Rouyn-Noranda. You could put anything you need to build a mine is there. And then when it comes to Manitoba, it is more remote, but there is a 9.5 million ton resource there that Inco drilled in the 60s. We need to go back in there, drill off another 10,000 meters, and we think that we could probably put 20 million tons on that project. That's a standalone project on its own in Manitoba.
Great, thanks.
Yeah, thanks. It's definitely an interesting project. Can you just talk through how long you think that DSO cash profits can last for? And then how long do you think it will take you to get up to reserve level and mining permits?
So from the DSO, it's a 50,000 ton bulk sample, and we'll try to offtake all the 50,000 tons, obviously. The profits that'll come out of that, again, it's going to depend on where it's being shipped and who we're shipping it to, but we've definitely got some domestic interest. And we've had a number of customers already up at site looking at the ore. So I think, if you're optimistic, if you look at what was signed recently by Corp, that was $950 US. They signed the contract for a 50,000 ton sample. So you'd be looking, now you've got to take your production costs out and potentially shipping. So maybe you're looking at 35 million. That should really finance all of our exploration needs on all three projects into the foreseeable future.
And then the time frame to get to mining permits?
Well, I think the bulk sample permit, we're probably looking at 4 to 6 months on that. And then a mining permit is going to be more traditional mining permit. You're looking at probably 1.5 years, 2 years for that.
Thanks.
In a sense, you've already answered the questions that I was going to ask was just the timelines. And, 4 to 6 months permitting, 1.5 years potentially to first production, I suppose. Is that a realistic target? What's your sense on that?
Well, we've had an initial conversation. This permit literally was filed 2 weeks ago. So we've had an initial conversation with the Deputy Minister of Mines in Quebec and explained what we're looking to do and why we're looking to do it. They seem to be on side at this point. They're going to come back. They're going to evaluate the permit. They'll come back with their initial list of questions. We'll answer it. We'll back and forth. So that, I think, in Quebec, you've got a pretty decent formula of how a mine gets permitted. And I think same for a bulk sample. So I think 4 to 6 months is reasonable for the bulk sample permit. And you're probably looking at 1.5 years at least for a mine.
And the other question is, how much cash do you have in the company?
We've got about 1.4 million per our last financials, and we have about 2.5 million coming in the money warrants.
So if we look to the next step after permitting of a mine, what kind of capex would you think would be required to develop the mine and build a processing plant?
Well, I mean, so ultimately, I guess you would like to become fully integrated. We haven't done a PEA. We haven't done a feasibility study yet. I don't think that I can even reasonably suggest what a mine would cost. It's going to depend on if we're looking to put a mine in, I guess it depends on what you do. If you want to continue to just do DSO, there's very little CapEx at all, even in a full mining operation, because you're just basically blasting and crushing. The Cermak project, it's a hill. And so you're almost in a quarry operation initially. So it's pretty low cost mining there. If you want to put in a concentrator, then you're probably looking at bigger CapEx obviously required to put the concentrator in. And there you're probably looking at 200 or 300 100 million for a full scale mine. But again, that would be a much larger operation. I don't know that we would look to put all that in right now immediately. I think there's still exploration to be done to really discover what the potential is at Cermak and what the potential is at Cadillac, as well as the Manitoba project.
Thank you.
Good.
Big hand for Wanda Cutler, Vision Lithium. Great job, Wanda. Thank you so much. And I'd like to thank the panel for some fantastic questions all across the board here. We have 5 companies. I will review who they are. Charles FitzRoy of Bradda Lithium, Anthony Margarit, CEO of K2 Gold, Peter Ledwidge, the Managing Director of Mako Gold, Paul Fowler of Magna Mining, and Wanda Cutler of Vision Lithium. And we're going to take this time to vote for $1 million of my personal money. No, imaginary money, but it's still $1 million. So we are going to award that to the winner. If there is a tie here, I will reluctantly break that tie. Okay? So let's get the votes now. I'll take the tally. Let's begin with Mr. Nasr. You need a microphone, sir.
So do we need to vote straight out? Or?
Yes.
Yeah.
Who do you like?
There's 2 I like. So I'll go for Magma.
Sorry?
I'll go for Magma.
Okay, and why?
Because the project seems to be very well thought. It's, there's a hub and spoke, there's exploration upside, it seems. The business seems to be funded, and I like very much the local element of it, which is guys in an area that know everything about it, that were able to identify something and jumped on it. That's very, very valuable, I think.
Thank you. 1 vote for Magna. Mr. Dixon.
That's 2 votes for Magna. And I echo everything that my colleague here said. It's, Sudbury's the best, I will say it because I'm Canadian as well, the best nickel province and area in the world, among the very best. The local content with the management, and management actually owns a lot of stock as well. And the FNX analogy is an excellent one. That, the footwall discoveries that FNX was pulling out 15 years ago. Do you know that in 2006, FNX Mining was the #1 stock on the TSX in terms of percentage gained? I'm not drawing an analogy there directly, but I'm just saying it was because they hit those high-grade footwall discoveries, and I know that that's the strategy, particularly at Crean Hill, and they just made that acquisition. Right metals, right time, right jurisdiction. That's my vote.
Thank you, Mr. Dixon. Mr. Porter.
I'll just point out that Rob is also the major shareholder of Bradda, so we could have all been bribed as well. Just pointing that out. I think my colleagues up here were fine with that. I, perhaps unsurprisingly, am also going to go with Magna. I think it's probably the most advanced project in terms of nickel sulfides that I've seen for quite some time, and got some great neighbours as well. Tier 1 jurisdiction, and the world is certainly going to need a lot of nickel over the next few years as well. So for us, or for myself, Magna it is.
Well, I think we've got it, but I would like to continue with Mr. Burridge.
Well, I'm going to be a little bit controversial here, and I'm going to go for Mako because it's solid exploration, years of experience has gone into building up a land package, and I love Magna. There's definitely space for it in the portfolio, but if I'm putting $1 million into exploration, which is the title of this panel, I'll go with Mako. All the other stories were great as well.
Thank you. And finally, Mr. Street.
Yeah, thank you. I just wanted to say that all five I thought were very good presentations and very well presented and insightful. I'm going to split my vote between two, and the first one is Mako. I've always been a big fan of Côte d'Ivoire. I think it's a really good start to the project. I think it's well valued. I think the team's done it before. And the second one, predictably, might be Magna. I'm not generally a big fan of hub and spoke type models, but having been to Sudbury, I can see how that might work. I think they've got a good team. I thought that was a good story.
Thank you. What a great panel and what fantastic presentations we have today. I would like to, on behalf of Minds and Money and everybody here who's participated all day, we thank you very much. I'd like to present $1 million to Mr. Paul Fowler, the VP of Magna Mining. And you get a bottle of champagne, too, actually. One from yesterday and one from today. Great job, sir. Fantastic job, and fantastic job with everyone. Thank you so much.
Thanks. Yeah, well, thanks everyone for listening. I hope the presentation resonated. We're super excited about what the next year holds. We've also been pleasantly surprised by what's happened to the share price in the last month since we closed the transaction. So, yeah, long may it continue. Thanks very much for coming, and I hope to see you next year. Thanks. Thanks.
And I'd like to thank our judges. Give them a big hand. Karim, Michelle, Nasr, Rob Dixon, Daniel Porter, Mark Burridge, and David Street. Thank you so much for your participation. I'm Ellis Martin. It's been great being here for the past 3 days or so. Much love and happy investing. Cheers.